Top of the morning to you, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Tuesday, April 6th. Okay, quick check of futures. Large cap and Nasdaq are down about 0.25%. Small caps are down 0.7%. Oil up 1.4%. Copper down 1.5%. So not a lot going on this morning here. Markets are pretty quiet. I did see one headline on Bloomberg that caught my eye, and that is the headline reads, China tells banks to curtail credit for the rest of the year. And with a little byline that, officials see bubbles forming. And I was just thinking to myself, what in the world would happen if the FOMC came out and said they wanted banks to, dial back the credit because they saw bubbles forming? Can you even imagine? I can't. So, anyways, it's been a while since we checked in on the McClellan Oscillator, so I wanted to do that this morning after we've had a pretty steady round of buying. The NIMO here, which is the the New York Oscillator, came in here down to -50, and we've since risen up to 30. If you followed my work for a while, you know that these oscillators are important from the standpoint of when they get overbought above 60 or oversold below -60, then you can use them to help you on directional trading, and you can see how well the indicators work. And it's a lesson that I've learned over the years is you don't fight NIMO, and you don't fight NAMO. NAMO is the Nasdaq Oscillator, and you can see that yes, it can get oversold and it can go -100, or here last March -124, but it's going to slingshot the other way. And if you're down here, either one, holding on to your shorts, or two, shorting into the hole, late to the party, now you're going to short. Once you get down to this level, it's just, it's sure as anything, it's going to reverse and go the other way. So you've got to keep these oscillators at the forefront, especially near extremes. Now here on the Nasdaq Oscillator, we're at 22, so that's nothing. That doesn't really give us any kind of signal at all. But if we were to continue to rally and get up here into the 60s and 70s, then it would be a prudent time to be, dialing back on risk, because it'll end up going the other way. So the oscillators, at the end of the day, they look good. No, they're not screaming overbought yet, so we can keep on rolling. Let's go into SPY. SPY 2 hour. We had the gap yesterday. We had the gap and go. We gapped up to 403 and just kept going. We're totally in blue sky. I've dropped in a trend line off the low here. If you had gotten long at any earlier point in time, or held, long positions in SPY from back in here, I would certainly be ratcheting up your stops here. And I think the place that makes sense is right here at the top of the gap at 403. You could give back a little bit today, but you don't want to break this trend line, and you don't want to fill this gap. If you're holding longs, then you would be back in here, $7 lower, back into the 401s, the 400s. And then, once you've broken that trend line, then the door is open for further pullbacks. And you can see we've got another gap here between, let's just call it 396 and 398. So there are gaps below that'll need to get filled at some point. So I would move up your stops to just below 403. Here it is on the 30-minute chart. You can see the big gap up and then momentum push and then kind of settling in later in the day. And we ended up building, it's small, but a little volume over price bar here. And I just extended that line towards 405.50. That would be, if you're trading on tight time frames, 30-minute or 15-minute, that might be a good place if it's going to roll over to do a tactical short there, only if it breaks, and see if you get a move down to 403 for a potential gap fill. But I mean, the market's strong. It may just come in here to 405.50, find support, and then go. QQQs, strong day. Nasdaq or mega cap tech is coming alive, and that's powering the Qs. I have removed a prior gap that was here. It comes from right over here. On that gap entry, that was a long, and you got nice follow through the rest of the day. Now we've got an open gap below from 327 to 324.57. I show overhead resistance here. Let's call it 334, and then the prior highs up at 337. I think this will be largely dependent on, do they keep piling back into the FATMAAN names, the Facebook's alphabets, all that kind of stuff, as they have been over the last few days. And if they do, then I would imagine it would take out the all-time highs, but still work to do. There'll be a layer of resistance here at 334 and at 337. So you just have to watch price action and see if it stalls or if it powers through. If you're an active two-way trader, you can obviously take an objective short at any of these levels and see if you get a pullback. But I mean, yesterday's action was really strong. Usually, if you're watching a 5-minute chart, you'll get a 50% pullback on a move. It'll do that stair step. It'll make a surge, pull back, put in a fib retracement of 38 to 50%, give you a chance to get long at an objective level, and then, take the next stair step higher. Yesterday, it was just pure buying the whole day. There weren't any really appreciable pullbacks, even on small time frames, and you see that here. I mean, no red candles at all till right at the end of the day. So if you didn't get your entry on the gap entry, it would have been hard just to jump in here and buy at any point in time. So anyways, I've dropped a trend line off of these connecting these lows here, and I would use that as a benchmark on your trading to stay long against the trend line. But if that were to break on a pullback, I think you probably come back in here and test this gap at a certain point. Not IWM's day. I mean, it finished up 0.5%, but you can see here we talked about that open, the gap open, and on this one, they did fill the gap, the opening gap. On SPY and QQQ, they went the other way. So, I mean, that just goes to show you it's not just, one thing for all the indexes. They all do what they want to do. And in this case, they sold the open and it came down here and filled this gap and then found support at the bottom of the gap and bounced. So if you caught that short trade off the open, you did really well on that. And you can see it here, came into 224, spent most of the day and got a little push into 225. I think today North of 225, you can be long. Below 224, I think you can be short. Not that the chart is bearish, it's not, but if you lose support, that's a sell signal. So you may get a move back into 221, and then that would be your objective level to recycle back into longs. So this morning I would use 225 as your long pivot and buy signal, and 224 is your support and sell signal. So if you're new here, thank you very much for spending some time with me this morning. If you like the commentary, please hit the subscribe button and the alarm bell. You'll get all my video content. You'll be notified of that. And then over in the show notes, links to the blog site and to register for all my content, whether it's after hours or midday. Any of my market observations that I send out, you'll get right in your inbox. And guys, please leave me a thumbs up and a comment below. It's helping build our engagement and viewership in YouTube. And more is better, right? So if you've been with me a while, please do that and support my work. I'd really, really appreciate that. So let's move on to FATMAAN, where there was a lot of action, a lot of positive price action, where you can see on Facebook, and you'll see it on all the other charts as well, these have laid dormant for a long time, and now they're starting to emerge. So on Facebook, I'm on the daily chart here, we broke out to an all-time high, taking out this, let's just call it 305 level, and now it's all about holding the breakout and plowing new ground. So if you're in Facebook, I would ratchet everything up to 305. That is your new line in the sand, and you can set your stops just below. For those of you that aren't in it but want to be, I think any kind of pullback that holds the breakout at 305 is something you can buy. And, that's a very common technical move. You hear me talk about it all the time. Breakout, back test, and then go, right? So if you get that over the next day or so, I think it's a very strong, objective, long entry to buy a pullback into 305. And, depending on your time frame, I mean, if you're a guy that wants to look out to the end of the year and buy some January 22 calls, I mean, that $5 is going to be nothing if the trade works. If we go, balls to the wall the rest of the year, you can get your strikes wherever you think you want them, whether just a little bit out of the money, at the money, way out of the money, whatever you want to do. That's personal style and preference. But then you can set your stops, back here around 300. And, if this thing goes to 400, that $5 potential give back is going to be nothing. So, time frame is everything. If you're looking for something for Friday, that's totally different than the end of May, and that's totally different than next January. So you'd have to, pick your spot. And if you end up waiting, you may end up waiting a long time, right? They keep stacking green candles. It'll be harder to do a full back test the farther away it gets from 305. So really strong chart. Nice move off the floor. Apple starting to make some noise. Here was our gap. We said anything north of 123 was a buy. And look what happened. We gapped higher, but then we had the reach back. We had the reach back wick right to 123. And if you had that on your radar and you were ready to roll and you got that quick backfill of the opening gap, that was your green trigger. And if you did that, you got a nice $3 push into the close. So now anything above 125, I think, is bullish. And your next buy signal is a breakout above 127. That'll be an important level. If you got a little pullback into 125 that held, I think you can buy it there and look for 127. But if you don't, then I think the next level that can be bought is 127. And that would open the door for a $3 move up to 130, possibly all the way up into this gap and ultimately this 134 area. Tesla was kind of soggy, gapped up, pulled back into the gap, and then came back up to resistance, and then sold off into the close. I mean, you can tell that our resistance bar is in the right place. Resistance, bunch of resistance here. Here was a try, here was a try, here was a try, all rejected in that little window between, let's call it 708 and 710. What you got to see is ultimately Tesla break above 710, and I think that would open the door probably to much higher. I've got a level here at 725, but honestly, if it powers out of this level at 710, you're probably looking at 750, something like that. We'd have to go to the daily chart to dial it in, but you can see that price knows exactly where it's at, and each and every time for a few months now, price has backed off at 710. So that's a really important level. Don't discount the possibility that as a first move, price comes down and fills this open gap. Maybe come down to 670, give you a big fake bar to fill the gap and scare everybody, then reclaim 670. And if you see any kind of a move like that down here with a hammer that comes up and then closes just above 670, that would be a nice buy, I would imagine, because one, you'll have the gap already filled, and then that hammer candle shows you that there's buyers there, and then you can get long against 670, and at the very least look for 710, and that's that's a $40 trade in and of itself. Moving on to Microsoft, I've pulled back to the daily chart. Yesterday we were talking about 250 as being possible, and sure enough, I didn't expect it to get there in one day, but it did. So we broke out to all-time highs from back here. That was our last place we tested it. So now up here at 250, if you had gotten long at any point here, you've got to move up your strikes to 245. Your stops. And if you had gotten this move, I would probably be trimming and, lightening up, taking some profits, almost in anticipation of some type of a give back, maybe even only half of this candle. So maybe a pullback into 247, something like that, where you could reinitiate a long. But certainly, if there's a pullback to 245, anybody that's not in it right now, that would certainly be a very objective long, and that would be a place I'd like to see you take a shot long with a stop just below that same move. Breakout, back test, go. Very common move, and so be on the lookout for that. But great trade if you got it down a couple days ago. Amazon had a good day as well, up 2%. We took out this 3,200, which was an important level. So now the next key level is 3,250 on the upside. And you can see, if I went back even further, you'd see that this 3,250 area was important with multiple touches back in time. So really, to open the door further, we need to take out 3,250. So if there's weakness today and it pulls back into 3,200, that's an objective long, and that's where I would be focusing my attention. Really kind of like these moves. Look, breakout, pull back to support, breakout, pull back into support, and we really haven't had that since then. But that's the kind of move I'm looking for, is maybe go up here and tag 3,250, but then retreat, pull back, regather, and then make the next push higher. But the free 50 club keeps working. Keep working those $50 increments, because they've been pure gold here. You can see this 3,200 level right here was also checked a couple times. So Google, really been the star of the show the last few days. This is a weekly chart, and this is a chart that we showed when price was in this area. We drew a bull flag, we projected that flag, and that price target was met. And then we've spent months consolidating, and now we've broken out. So what I've done is show this as a bull flag with the extension that points to somewhere between 2,400 and 2,450. So big picture view on Google is it's breaking out from a weekly flag consolidation with a measured move up towards 2,400. We've got a trend line here that you can use as a gauge, and also it has recaptured the trend line off of the 2011 low, and that's a significant technical event. Whenever you recapture a long-standing trend line going back 10 years, that's important. So I think Google goes higher. We've been flagging these levels the whole way, so there was plenty of opportunity to get long if that's something that you had wanted to do. Netflix, real simple here today. 542.50. Above is long, below is a short. I think it's going higher, given where sentiment is, and how there seems to be a bid in these names. But I wouldn't discount the fact that you could get a pullback first. And so I think if you got a pullback into 3,250, which you actually got yesterday right here, pullback to 3,250 can be bought. So if you bought this long wick, this break below, and then recapture, that was a great trade. So kudos to you. You got your 10 to the good here at 542.50. Let's move on to some chart setups and things I want to point out. SMH Semiconductor Etf. We are right here at the prior highs, and the thing I want to point out is we gotta if you're long, gotta break out. Why? Because this, as it stands, could be a double top setup. Why? Because look at the bearish divergence. We're back at a prior high, but at lower momentum and lower RSI. So in order to negate that, what we got to do is push higher, go to all-time highs and keep going, and then burn through these divergences with RSI breaking back above 70 and momentum continuing higher. Otherwise, if this stalls here, like for days, and then we get this rollover in PPO, that would not be good. So it's important in the next couple days. I mean, it doesn't have to be today, but it's important in the next couple days for SMH to, in fact, break out and burn through these bearish divergences, or it'll look like a double top setup, and that's never a good thing. Here's Draftkings. I've drawn in an upward channel. We are currently down here at the bottom of the channel, bottom of the risk range. I think this is an objective area to take a long against the 50 here in green at 62, or the uptrend line, whatever you want to do there. But I think it is objective. If the market stays strong, this is going to drive higher, and you can see, drives to the top of the channel have been met with pretty brisk selling. Here was we had one here, pulled back, had another touch of the top, down to the bottom, top, bottom, top, bottom, top, bottom, and now we're at the bottom. So unless there's a change of character and they just, pull the rug out from under this thing, I think it stabilizes here and goes higher. You'll need to check their earnings and all that kind of good stuff, but I like the idea of buying down here at the bottom of the risk range. eBay threatening a breakout here at 64. Alarm that in your system. Check out when earnings are going to be, and you might get that breakout ahead of earnings and a pre-earnings run right here on eBay above 64. Jinko Solar. This is a chart setup that we showed a month ago, and it was right here at where this giant air gap was and still is. So it broke down, found some support here at 37.50, had a bounce, for more or less got rejected at the 20, and is now, working its way back down to support at 37.50. I would set an alarm there. The solar sector is getting whacked. It has not stabilized yet. And if you get a break below 37.50, there's still a lot of air down here, guys. This is one of those things where you might be thinking to yourself, hey, it can't go any lower. Yes, it can, because there's nobody home right here to stop it. So if you get a break below 37.50, I would not hesitate to take a short position there and look for 15 lower down at 22.50. And yeah, so this is a bearish look if it breaks. Now if it holds, it's a different deal, of course, but I would be certainly keep having your eyes peeled at 37.50. If it stabilizes there and refuses to break, builds a nice shelf of support there, that's different. But we've had one tag of that level, we've had two tags of 37.50, and now we're coming in for the third. You keep knocking on that door, somebody's going to answer, and that's where the flush happens. So keep that in focus. So there's some setups for you. There's some levels for you on the indexes and FATMAAN names. If you haven't been focusing on mega cap tech because they've been dormant so long, well, they're all waking up. So if that remains the case, you can make some good money on these names given these moves. And you've got, I mean, massive amounts of liquidity. You've got really tight spreads on the option chain. Lots of liquidity there. You're not like got a wide bid-ask spread that you got to deal with and lose money every time you trade on slippage. So this may be an emerging time for the mega cap trade to reassert its leadership, and so it merits paying attention. Hope you found the content useful. I'll remind you again, please subscribe and hit the alarm bell. That would be great. And pass the link along to somebody in your group who may benefit from the work. This has been Chris Buss with Traders Profit Compass. Have a strong day of trading, and talk to you next time.